So the next part would be accounting in real life or at work. So what are the biggest difference between accounting in an organization, in JMA, and in real life? So like I mentioned before, JMA does cash accounting. In real life, we do accrual accounting, which basically means we recognize expenses and revenue when they occur and not just when they're paid. So basically, there are times when we promise to render service eventually to an entity, we get the cash already beforehand, but we perform the service in the period after. And we need to report on our revenue before we actually render that service. Instead of recognizing the revenue in the period now when you got the cash, you have to recognize it in the period after when you actually do the service. Because for revenues, you only recognize them when the service has been done or the goods has been transferred ownership to the customer. So if none of those have happened yet, you can't recognize your revenue. Same with expenses. Let's say mga utilities. At year end, we have to report our expenses, but we pay for our utilities, let's say for December, January pa. We're not going to record our expenses on January when we pay them. We have to record part of it in December already. So we're going to have to accrue expenses even before we've paid for it, because that's when we've incurred it. Because we report expenses when they incur and not when we pay for them. And just to sum both of those points also, what I basically also described was the matching principle, which is basically we recognize expenses and revenues during the period when they happen, and like we recognize the expenses related to the revenue during that happened in that certain period. So for example, when we sell mga inventory, mga shirts, fundraisers, for this, you're going to recognize all the shirts that you sold this year in this year's FS, and all the shirts that you sold that you're gonna sell next year and next year's FS, even if you get the cash this year. Let's say it's a pre-order. Same with expenses. The inventory that you use for the shirts that you sold this year, you're going to expense that this year because it's related. Not only is it related to the revenue of the year now, but it's also happening in this year. So you recognize it, in this year. You get that? Yeah, it's basically you recognize expenses and revenue when they happen, when they're paired up. So that's probably the biggest. It's a lot more formal. It's a lot more complex. So for example, let's say JMA had a loyalty card. Let's say for every a loyalty card now, when you buy JMA merch, you will earn 10 points. Let's say 500 that you spend, and for every 100 points that you earn, you can avail of a free shirt. Now for JMA, whenever customers earn points, it won't really mean anything to them money-wise. Like they're probably gonna track in the tracker, like, oh, we earn customers have around 500 points now, so we can predict how much shirts we have to give for free. But in terms of like recognizing income, JMA doesn't have to do that because there's no cash movement. In the real world, if there was a loyalty program like in Wildcard, basically whenever people earn loyalty points, I'm not going to delve too specific into it, but basta, when people earn loyalty points, you don't earn any income from that. You only earn income from loyalty points when they actually use the points in the future. So whenever people earn loyalty points, you actually have to recognize a liability, which basically because you are going to have to render that service when they spend the points for whatever whenever. So it's more relevant to a company in the outside world because it shows a liability on their part and it's required in the stand. In JME perspective, if you guys did a loyalty program, it's not super relevant to you because again, there's no cash in, cash out, and all you really need to do there is just track how many points are being incurred, just to give you an idea how much free stuff you have to give. So that's basically a big difference between the accounting done in an org and accounting done in a company. Another difference would be that, let's say in JMA, there's only sometimes like one or two people in charge of all the finances, all the fundraising, all of the money tracking, or there's only one team in a non-based team that's in charge of all of the finances in a team. In the real world, there will be multiple teams in the finance team that are catered to different accounts. For example, in Wildflower, there will be a specific person in charge of monitoring the rent expense. There's a specific person in charge of monitoring all of the income that comes from the branches. There's a certain person monitoring the AR. There's another person journalizing. That's monitoring all our cash disbursements. And then there's another person monitoring all of our depreciation expenses. In JMA, that's all one person, or that's one accountant doing everything. But in real life, it's multiple people focused on specific accounts and not multiple people helping each other on different multiple accounts. It's specific per person. So there's a lot of, it's very departmentalized in the real world. So for example, in me, I'm in sales control. The account that in Nestle, I'm in sales control. The account that I handle the most will be trade spend, or basically the amount that distributors use whenever they have promos in mga supermarkets. So I hone on that. Whereas another team could be looking at marketing spend or expenses from marketing initiatives, like yung mga commercials that you see in the TV or on YouTube. So it's super specific. So you might think it might be a bit boring na, one person is just looking at revenue, another person is just looking at rent expenses. And it sometimes could be tiring because some people find it boring na your focus is only on one account. Like it's too monotonous. It could be, but that's not the only thing that happens in an accounting department. Like there's also the reporting side. There are people who are also in charge of summarizing all of the data that comes from the different people and then creating the FSs or creating the managerial statements or summaries that their superiors will need to create decision making. So maybe that might be something people would be more interested in. Not necessarily monitoring one account, but having an overall view of all of the accounts, which is what I did also in Wildflower. I would help each of the staff monitor their own accounts, and they would give me the reports, and I would summarize all of it into our financial statements that I would give to my boss or our auditors to get audited. So it's a lot. Accounting departments can be more dynamic than some people might think it is. In the most strictest, like in the most general sense, like that's basically it. In terms of like the stress and workload, it does get overwhelming because you have to analyze a lot of data. For example, in Wildflower, our disbursements are in Excel files, and I have to analyze them and put them in our financial records. And usually, there could be around 4,000 to 6,000 rows per month that I have to look through. So it does get intimidating at times. But the thing about accounting that I find very weird, not really weird, but apparently it's a hack na just because you have a lot of transactions doesn't mean you have to look at each of them one by one. You can group some of the transactions together. You can find ways to group process different types of data so that it will be a lot easier for you to do. Because like it's in JMA, you're going to have to input each of the data one by one. We spent 50K in the suppliers, we spent 100K in the venue, we earned 20K from the rummage sale. Yeah, you have to itemize it that way because you have to be specific for JMA purposes. But in the real world, you can summarize some of these transactions, and that's what the software, our accounting software, does. It will itemize all the transactions into a group and just summarize it from there. So instead of looking at 4,000 to 6,000 transactions, I'm probably just looking at like 100 groups of transactions wherein I can see the total, and if I want to drill down, then that's when I can see all of the multiple rows. If you are going to go into the accounting field, you just have to get used to the amount of data. Yes, it can get intimidating, but you just have to get used to how to manage it. A lot of accounting work is basically managing the data that you have. It's not just counting, it's not just computing, it's really just managing a lot of data for you to see the bigger picture and for you to summarize it for your superiors or for yourself. So that's basically the biggest stress that comes from accounting for me. Just trying to deal with a lot of data and just trying to be as organized as I can in trying to process the data as quickly. I think the best thing that you can do there, like in accounting, we don't put all of our data in our accounting software right away. We put them in what we call subsidiary ledgers. Basically, we put them in in a specific file, and then from there we summarize that data and then put it in our main tracker, so to speak. So I guess for those that kind of have a hard time going online, putting in the trackers, what you could probably do is yun, put it in a notebook muna, summarize it, itemize everything in a notebook, or maybe ask the different sub-teams, like ask Lodge, can you itemize all of your expenses on your own first? And let's say at the end of every 2 weeks, give it to me, and I will summarize every 2 weeks or every week, or whenever your systems point person tells you to to update your tracker. So that's actually a good thing to do, because one, it gives you access to the specific transactions without having to go overload into your tracker. And then second, it also makes it easier for your finance point persons to update your tracker, because they don't have to look at so much data. They can look at the summaries, put it in the tracker, and then see where your position is at. And if you have to drill down to like, our marketing, our promo expense is high, I wonder why. Then you go to your notebook or to your promo's own tracker, and then see where does the increase in expense come from. So yeah, that could be one. That I think that's the best thing that you can do. Make subsidiary trackers, make your sub-teams do it, or if you don't want to do it, and then every now and then summarize it and then put it into your tracker, so it becomes easier for you. In real life, that's what's done naman talaga. You don't always put into your accounting software right away. You always put it in a subsidiary ledger first. In fact, you have to approve what's in the tracker if it's actually accurate, and then you put it in the software. So probably you can do that also if if it's hard for people to put it in the trackers.